Our next guest says the prospect of a recession is off the table, but a pause in rate hikes is still the right call here. Mark Zandi is with us, chief economist at Moody's Analytics. Off the table.
Did I say that?
Did
you get that?
Did
off
you?
The table. I mean, I think we can avoid a recession. Odds are that we'll be able to avoid it because of the consumer. I think the consumer is hanging tough. But off the table sounds really strong.
You're not feeling that strong.
Well, you know, it's all about probabilities. I mean, I wouldn't dismiss recession risks, but I do think they are receding, and I do think consumers are hanging in there. And as long as they're not spending with abandon, you know, they're just doing their thing. And as long as they continue to do that, and I think they have the resources to do that. Jobs, unemployment, excess saving. You know, their stock portfolios are a little lighter than they were a couple of years ago, but they're still much higher than they were before the pandemic. So I think if you add it all up, I think consumers are, you know, in the game, and as long as they stay there, I think we can avoid a recession.
Do you think the Fed, this is being characterized likely as a pause, do you think that means that the Fed is done hiking for this cycle, or is this a skip?
I think it depends on the data. You know, between now and I guess it's late July is the next meeting, and we'll get another jobs number. We'll get a couple more inflation reports. I think it'll be a close debate. You know, sitting from where I'm looking, I'd say this should be the end of the story. I'm a little confused. Why one more rate hike? I mean, it would, in the grand scheme of things, why would that, you know, make a difference here? So
they seem to want to just keep people in a hawkish mood, though,
I think that's it, right?
Whether it's using the dots of projections we'll get at the top of the hour to sort of say, oh, well, we think we might need to do more, whether using the rhetoric, whatever it is. They just, I think they look at the market and they're like, they're off to the races with this pause or whatever, and they don't want to encourage that.
I think that's got to be what it is, right? They want the stock market to come roaring back. They don't want financial conditions to ease, you know, significantly, because they still have work to do, getting growth down and getting inflation back in the bottle. That's got to be it, right? Because it just feels a little weird, you know.
How much of a headwind is student loan, you know, repayment? So I think we say the median payment is about $400 a month. It's going to start, you know, in the next month or two here.
Small. You know, if you add it up, it's, you know, 60, 70 billion per annum. So you do the arithmetic, that's 2-3% of GDP. It's not coming at the greatest of times. You know, it's going to happen here at the end of 2023, going into 24, when the economy is going to be the most vulnerable. So the timing isn't great, but I don't think at the end of the day that does the economy in. No.
You know, we didn't get into it with Dan Clifton, but one of the points he has made is that we've rarely had a recession in a presidential election here. And as everyone keeps saying, it's going to be a 2024 event. Now that could make things very complicated in this town. Mark, we'll leave it there, though.
Yeah.
Unless you want to weigh in on politics.
No, you know, Dan told me that he interviewed for a job with me 20 years ago.
Really?
So, yeah, and I was afraid I didn't give it to him, but he said, yeah, I did give it to you. I did give it to him, yeah. He took a better job, though, obviously.
He's done just fine.
He's done just fine.
As have you guys.
Yeah. Thanks, Mark.
Thank you.
Good to see you.